Market closing trades right here, Niti. Now, what looked like it's going to be a quiet session, drifted lower all the way to the lows of the day. When we was up that 11,600 mark on the Nifty and closing bell, and a very bad breath as well. Completely changed hands from what looked like a positive start. It reversed trend, and the declines took over by a huge margin. But move on, the government that takes office post May 23rd is all set to be pleasantly surprised, and sources told ET Now that the Bimal Jalan-led panel that is reviewing the economic capital framework is likely to recommend lowering of RBI reserves. Now, the amount of reserves the central bank can have was one of the key contentious issues between the government as well as the RBI, and even forced the RBI Governor Urjit Patel to step down. Ruchi Bhatia joins in with exclusive details. Ruchi?
The new government could be in for a pleasant surprise. This election season, we have seen both the big political parties making extravagant promises, and it looks like the new government, whosoever comes after May 23rd, will be in for a huge bonanza by the central bank. Now, we're given to understand that the Bimal Jalan panel could be in favor of lowering the RBI reserves. We still don't know whether it's going to be prospective or retrospective in nature. However, it is important to note that the Bimal Jalan panel, once they submit the report in June, could be of the opinion that the RBI does not need to be overcapitalized and they need to bring down their reserve levels. Now, we are given to understand, and I've been speaking to top members of this panel, we are given to understand that the Bimal Jalan-led panel is going to talk about how there is a need to balance both the growth function as well as monetary function. We are seeing how consumption is slowing down in a big way, and there is a need to push the growth engines. So where will the money really come in for that is, of course, the big question. We're given to understand that the Bimal Jalan-led panel in their report could be suggesting that the transfer of funds from the RBI to the central government could be done at a long-term basis, like a 4 to 5 year basis. They believe any short-term infusion from the central bank to the government could be inflationary in nature, and which is why they are looking at a long-term framework in terms of how the funds have to be transferred. Now, we're given to understand they will also take into account the kind of reserves that were used in dealing with the past two crises, the Asian crisis as well as Lehman crisis, and that will be one of the factors through which they will come to a final formula as to how much reserve the central bank needs. When it comes to how these funds will be used, we still don't know whether the Bimal Jalan-led panel will be specifying how these funds have to be used, but what we do know so far is that the panel is in favor of lowering the capital reserves of the RBI. They will be submitting their report by the end of June.
Okay, Ruchi, thanks much for that. In fact, let's hear out the take of a consulting editor, Maithili Bhusnurmat, as well, who joins in on the phone line. Maithili, what does it mean for the economy and what implications could it have if implemented?
Well, it will depend on what exactly the panel has in mind. And as long as it is prospective and not retrospective, the consequences should not be too difficult to handle. Because ultimately, the RBI does make transfer to various reserve contingency reserve requirements, etc. And based on that, only as the basic reserve of the RBI been increasing over the years. There has been this view that the RBI holds much more reserves than most central banks. So every year, it needs not transfer as much as it has been doing in the past. So as long as it is prospective, it will not create any damage. It will not really rock the boat as far as the economy is concerned, because when you are going to do it retrospectively, then it will entail a shrinking of the RBI's balance sheet. And that might have greater consequences, graver consequences for the economy. But as long as it is a question of how much of current year's profit is transferred to the government, I think that will just be a welcome addition to the RBI government's revenues, and any government should be happy to get that bonus. But as long as it, as I said, it's prospective, I think any government would be happy. Retrospective would create problems.
All right, let's move away from that then and focus in on earnings. Titan slated to come out with its numbers tomorrow. What exactly are we looking at by way of segmental growth, and what are the headline numbers suggesting? Mubina is here to give us a view. Mubina.
Well, expect a good set of numbers from Titan this time around. Double-digit revenue growth of almost about 19% is what we are penciling in at about 4,650 crore rupees. EBITDA as well seen growing 23%, which will lead to healthy margin expansion of 40 bips at 12%. The profit, of course, optically may look very large because in the corresponding quarter there was that one-time exceptional loss of around 80 crore rupees. But adjusted for that, you're going to see decent double-digit profit growth as well. 400 crore rupees is we are expecting the profit growth. Again, it's going to be the jewelry business that is going to lead the growth. Mid-high teens essentially is what we are seeing the growth at. But for FY19, there is a possibility they may miss that 23% guidance that was given earlier. For the eyewear business, that is supposed to be very strong because do remember base quarter was weak. So this time around more than 20% of eyewear growth is what we are expecting. Remember that in the corresponding quarter the effective tax rate as well was higher. So this time around the bottom line may get a boost because of that as well.
Okay, that's the expectation from Titan, which will be delivering its numbers tomorrow. But here's India's export norms, which are restrictive. That's the word coming in from US Commerce Secretary Wilbur Ross. He further added that India's appellate, or rather applied tariff rate is highest in major economies. Let's hear out what he had to say on the sidelines of his visit to India.
Today, India is only the U.S. 13th largest export market due to overly restrictive